Hey folks, welcome to Verified Investing here at InTheMoneyStocks.com. My name is Gareth Soloway, Chief Market Strategist. All right, so today's date is Monday, November 2nd, 2020, the day before the elections. I want to get into the charts on Apple, Google, Amazon, Microsoft, and Facebook because those are the market. And I'm going to talk to you guys about how these stocks are signaling further downside, which does not bode well for the overall market, especially the tech sector. Before we get into the charts, and I want to show you some key things here, I want to just remind you can follow me on Twitter at Gareth Soloway. You can come to InTheMoneyStocks.com. You'll see my name at the top of the website, Gareth Soloway. There's a drop down underneath. My two services are there, Verified Investing Alerts and Verified Option Alerts. Again, anything with verified in it is me. That is me verifying all my trades. And again, for you guys, I want the transparency. You see every trade in my service I take, the percentage I'm putting into it, the exact entry, the exact exit, all of the information you would need. All right, let's talk about Apple here. Apple is down on a market up day. That is not good. But that's not the whole story here, folks. When we get into these stocks, and I'm seeing Amazon lower today, Microsoft's down, Facebook's down. The only stock of this group that's up is Google, which is up about 35 points. They really had spectacular earnings last week. But everything else is selling off, and the reason is very simple, folks. You might say, oh, well, their earnings weren't up to snuff. That's partially true, but more so it has to do with potential regulation. And, a lot of people are talking about the elections, but remember that both sides of the aisle want to regulate these mega caps. They want to regulate Google, Amazon, Facebook, Apple. They both sides talk about how they're monopolies and so forth. So all of these signals point to hardships for these companies coming up. Now, whether or not that turns out to be true, who knows if we'll actually get regulation on them. But I do think that it's a very bipartisan issue, and there are not many issues out there that are. That is spooking investors. In addition, probably the bigger facet here is that these stocks have had such major money flow for so many years, all right, so many years, that you get to a point where it has to unwind. And that's what you're seeing right now. You're starting to see the unwind. Notice on Apple's chart, you have a high pivot and a lower high. We have a low pivot. We haven't made a lower low. But based on what I'm seeing here, it's likely going to happen. Now, you do have a short-term trend line Apple is trying to hold on to. Take a look right here. This gap, little pivot low, right to here, and then right to the lows. As of now, Apple has a small saving grace on the chart just because that's holding up. I do not think that lasts, though, but in the short term, you could say, okay, it gets a pass just in the next few days because it hasn't closed below that line. If it closes below that line, you're going to see a fast flush, probably within a week, down to this level and then the 200 MA. Now, once it gets there, a decent amount of unwind will have happened, but it still needs to me, it has to probably at least get to gap fill, maybe the 200 MA, before you could even talk about going long this stock. Now, there's a lot of small investors. I mean, this is the crazy thing about it, is that when you look at the millions of investors, new investors that have come into the market since March, a lot of them have bought positions in these stocks because they've been the winners. They just continually have gone up for years and years. But the big boys want that. They want that dumb money in the market so they can unload into it. This is a game, folks. I was talking to members in my live day trading room where we day trade every day, and we were talking about how analysts work for their companies. They're employees of a certain company, right? Usually an institution. So when they upgrade a stock and it's at highs, chances are they're doing it to coax in small money so that the big boys can sell into that. It's kind of like bag holders, right? They're giving the stock to those people at these highs to be bag holders. Same thing at lows. When a stock is at its lows and it's getting downgrades and you're at 52-week or all-time lows, the analysts obviously were really late to the punch on that if they're downgrading at the lows. What they're really doing is downgrading it so the panicked small investor says, oh my God, it just got a downgrade. I got to sell, sell, sell. Guess who's waiting to buy all those shares? The institutions. All right, remember, guys, it's these guys, analysts are not independent. They're not non-biased people, right? They work for a company. Someone pays them a salary. So you have to assume that there's some bias in there. And I always tell people, be very suspicious when you see an upgrade at an all-time high or a 52-week high and a downgrade at an all-time low. Be very suspicious. Now, going back to Apple, folks, we'll see what happens here, but watch for that. The fact that it's trading down on an up day in the market should be a little bit of an alert just in it itself. Taking a look at Facebook, guys, regulation is 100% coming for Facebook, but short-term it is still at support. Actually, you know what? You could arguably say, yeah, it's probably still at support. Here's a very crystal clear trend line. Pivot low, pivot low, pivot low. If this breaks, bye-bye. Wave it goodbye. 200 MA is your target on that one if and when that breaks. So keep an eye on that. Next, Google. Google's the one shining grace. It's kind of the big ones, it's been the one that's the valuation makes the most sense. That's why I think it's outperforming. It's that if you look at the PE ratio for Amazon or even Apple, I mean, Apple's at a ridiculous PE. Now, people love Apple like they love Tesla. They'll defend it till their dying day. But bottom line is, if you look at valuations, a stock that is a $2 trillion company almost, being Apple, there's no way in history that you ever see PE ratios of 30 or 40 for a company of that magnitude. They just don't have the growth. Even a company like Apple is not going to grow at 10 or 15 or 20% per year to be able to justify that. They just can't do it, not long term at least. So you're going to see these valuations. The unwind is going to come in, meaning that all the big boys are just unloading. They'll be buying back when these things are down 15, 20, 30% from these current levels, and that's just the way it's going to be. Lastly, Microsoft. Microsoft, again, short-term support here. You can see pretty clearly. Pivot to pivot to pivot right there. And again, I do anticipate that it should break this and go right to the 200. Microsoft has a little bit of a firmer business model. I do like the 200 MA more than, and it's closer if you look at it, right? So pivot high right here, 200 MA right here. That's where you should probably look to start to accumulate a little bit of a position for a bounce. And I do think we do get there in the near term. But bottom line is, when you look at these stocks, the valuations are still too high. The unwind, I mean, think about it like this, folks. When you have money going into these names nonstop for as many years as they have been going in, at some point that has to unwind, and it works very much like a snowball rolling down a snowy mountain. It gets bigger and bigger as fear builds, and guess who unloads at the bottom? The small investor. So once you see the panic at the bottom, that's when you actually want to be buying these names, not at current levels, which at least are off the highs, but I do think, again, they are going to be going lower, folks. There's just no doubt about it. It's kind of like Zoom. You know, the amount of hype on Zoom drilled it up here, and now you're seeing it come back in as people are just unwinding their positions. Now it is hitting the 50 MA. Do I think it gets a bounce here? Yeah, short-term a bounce, and then you know where it's going? This is going all the way down here, probably within the next 2 to 3 months, by year end, I would say, or in early January, because as soon as you get a vaccine, this stock should be probably half the value that it is. All right, and the reason I say that is because even if people aren't going to go fully back to work, let's just say a quarter of the population is going to go back to work that was working pre-pandemic, you're going to see, again, the growth is going to get zapped out of the stock, and they're going to actually have shrinking revenues for a few quarters, and the big boys are unloading. I guarantee you the big money's been unloading here. All right, I guarantee it. Smart money's been unloading there. All right, guys, bottom line is, this is my interpretation of what's going on. Again, I see further downside. I think just the fact that these stocks are down on a bounce day in the markets is not a good sign for them. And I do think, again, we will see sharply lower prices on all of these big name companies. And I do wish you come to inthemoneystocks.com. Look for my name. Look for my service, verified investing alerts, verified option alerts. And you can follow me on Twitter at Gareth Soloway. Take care.